Welcome to NeverLossTrading. Today the topic we want to cover is trade what you see. That's one of the key slogans we have in our trading, and it means a lot because often we base our decisions on assumptions. With NeverLossTrading we want to help you to see what is going on, triggered by institutional investment, and this is why we call it trade what you see, because it will be painted right on the chart. Before we go in details, let us look at the disclaimer. The risk of trading securities, options, futures and others can be substantial. So customers must consider their relevant risk factors, including their personal and own financial situation before trading. In our teaching, we are not acting as financial advisors nor as brokers. If you want such service, you have to seek out for licensed people who have made the license for that. What we do is we share a system that benefits us greatly, and now we want to go in details after we moved ahead with the legal disclaimer. So this is me, Thomas Barman. I'm the inventor of NeverLossTrading, and I tell you a little bit of story how I came across that, because I started trading about 30 years ago, and over time tried out a lot of the different things that you can do in trading and the different theories, and based on that I developed the system, and not only want to do that for me, but want to share it with the world to give other traders the opportunity to make money in a highly professional environment where we need to be prepared when we enter, and we need to have a clear perspective where to enter a trade, where to exit it positively, and where to exit it negatively, or adjust the trade if you want to. And we are teaching that in our NeverLossTrading concept. So how does NeverLossTrading look like? It looks pretty easy, basically, in the sense of when you see blue on the screen, the market goes up, or the price for the security we observe. Here, for example, you have that blue section. When you see red on the screen, we have a downward section. And with our newest model, here you see the top line chart, we spell out trade opportunities right on the way and give you a proposal which says trade only when the security, in that case the ES, that's the S&P 500, but it works for every security, is below 1333. That's the trade trigger. So next day it went below, so we triggered, we entered the trade, and we went along to the downside. The same happens here. You have a buy signal. That buy signal only gets triggered when the price surpasses the threshold spelled out by our software. If that's the case, you trade, and you trade blue, you trade to the upside. What you see is a very specific thing that we developed, a purple zone. Purple zones characterize indecision in the market. At the purple zone, the big institutional investors have not mapped out where they want to go, but they will have at the end of the purple zone. You see that here, in this purple zone, here. They hadn't mapped out where they want to go, but when it ended, there was a clear directional move to the downside, and we followed this one. The same happens here. A purple zone and a clear directional move afterwards to the upside, or even in the zone we had a move to the upside which was proposed. So this is how the system works. We try to keep it simple. Blue to the upside, red to the downside, purple indecision, mostly we don't trade. And that works for stocks, commodities, futures, treasuries, and it works for options, for futures, all the derivatives of those. And what we do is we measure the market pressure basically and apply a buy and sell strategy, because we have strategy to take advantage of both directions, not only buy and hold. No, we buy and sell, and we'll do that frequently and take the opportunity of compounding interest. Hence, the system works in uptrending markets or bull markets, it works in downtrending markets or bear markets, and it works in sideways markets, but we'll have to apply different strategies for each of the individual market setups, and our software is painting those on the screen. So the model measures the market pressure, I said that. So when there is pressure on the market from the upside and the downside, one side at the end of the day at a certain point has to give. We constantly measure what we call the SPU, the speed unit, which tells us how fast is the price moving per time unit. And with that we define how far the price will move outside of that territory where it's been in. And so if it leaves the current support resistance area to the up or to the downside, we'll go with it. And that's how we trade. And we produce high probable trades by that. I'll go a little more into our findings and our studies which support that. And so within that, for every trade, we have a specific target and we have a specific stop or adjustment for each and every one of our investments that we do. And that's what we teach you, how to apply that constantly and how to apply it in a high probability trade environment. Price and market pressure. So when you see the bulls and the bears, the buyers and the sellers, between them you can measure a field of force, like an electrical field. And that field of force basically has to give into one direction when it breaks out, and this is the direction which we will paint right on the screen for us to trade along with it. So you see we applied kind of like an electrical model around it, measuring the voltage between the two polarities, buyers and sellers, and then where the field leads to, that's how we pick it up and we trade along with it. Yeah, not only do we measure static pressure, we measure a dynamic pressure and develop the wave model, which has three components. It has an underlying wave like the currents, yeah, giving a direction or trend. It has a signal wave, which is showing the current tendency between buyers and sellers, and then it has a resulting wave, which surely also includes noise, but that's giving the momentum. And so with that we measure market happenings on three levels, three layers, and from those we get our market entry decisions or proposals. So what happens actually then? You can also put it in psychological terms. Basically we have leaders in the market. Those are bigger institutions that act as leaders, and we have market followers, which are called here the crowd. So if the leader decides to initiate an up or downwards move of a security, the market or the crowd has to follow or not. And we enter the trade when the crowd follows, and we've specified through our SPU, yeah, the speed unit of NeverLossTrading, where the best probable exit is for making our money. And the nice thing is we also deliver in some of our software packages scanners. You can scan the market intraday, per hour, per 4 hour, per 15 minutes, however you desire, for opportunities and trade along with them using the same model over and over and over again to your benefit. So how does it all work? 85% of the markets are institutional money driven. Institutions can hide their orders by placing them through ECN. These are electronic exchanges, so you don't know where the order is coming from, and they place it in small increments, but anyhow they show up on our screen. So the footprint of money shows up on our trade screen. I'll show you examples. So when the footprint of money shows up, we're getting ready. When it gets confirmed, we trade. We do screen the entire market, yeah, the entire 40,000 different securities for opportunities, but we have a preferred set of securities which we share with you in certain of our concepts, so that you have a clear perspective which of the shares are best to trade, are easiest to trade by having tight option spreads, by having dollar strike prices, and by providing a high liquidity which helps the investor to get always filled on the way in and on the way out of a trade. So who are all those institutional leaders and institutional investors? We dissected them in 4 sections, and 3 we put here into our graph. On the one hand, we have the liquidity providers. Those are the market makers, the ECNs and the wholesalers. They basically trade on the bid or the ask or the differential between both and make money with them. Then is the big sector which we rely on heavily. Those are the pro traders. Examples for those: Goldman Sachs, JP Morgan, Morgan Stanley, Deutsche Bank, Barclays Bank of England, United Bank of Switzerland, Credit Suisse. Those are pro traders, initiators that place a lot of orders that are leading the markets. Now we come to the followers, fund managers, pension funds, mutual funds, ETF and hedge funds. They often follow the tendency of the market, so meaning when a trend gets initiated, they jump on the trend and ride out the trend. And we see first of all when it's initiated, and when it gets confirmed by fund managers coming in, that's when we place our trade to move along with it. Yeah, and that's a very successful concept. What's the number 4 which we left out? This is basically insurance companies. They would overlay somewhere in here between, just not to confuse the chart. We left them out, but it's a big source of money, and it's institutional investment driven, so that a few deciders decide where the thing is going, and they belong to the part of the followers of the market. So the pro traders are the trade initiators. The liquidity providers at time also bring their interest in by far. In particular, you see that on Option Friday. But for the rest, we are looking for the pro traders and what they do. We can't specify individually who is initiating something, but by the sheer volume paired with the price move that they initiate, we can recognize on the chart that something is happening. And so here we map that out, saying there's institutional leaders taking the price out of the first support and resistance level, giving us a new high or a new low. When that new high or new low gets broke by the fund managers jumping into the cohesion, then we get in and we move ahead and we measure one SPU, one speed unit, and that's always put on the chart on the left hand corner, and we trade for that, take our profits and leave. When it goes to the downside, we trade with it, we take our profits and leave. There are multiple ways to do that, to go long in the market to the upside, or to go short to the market to the downside. And we are teaching you all of those and how to use the security, instruments, or even protective trades. So when we follow, there is a clear scheme of how the prices move. First, prices accumulate prior to a price move, and we recognize that. You remember the purple zone that I showed you? That's when prices accumulate. Then the price tests a new high and low, so the break out of the first barrier. When the new high and low is established, usually then other institutional investors jump on the opportunity, see that one of the securities is in demand, they increase the demand, and with that drive the price out. So on the breakout is where, when it gets confirmed, this is when we trade. So how does it look in the chart? Here I used an Apple chart. That's a daily chart, and you see how price broke out of the current range, so it was in there. It got confirmed the next day, we traded along with it. Wonderful. The same to the downside, new price breakout of the range, and we let the computer calculate that because our eyes would cheat us, and we trade to the downside, and we do that over and over and over again. On that chart we traded between 7.4 basically and 11.7, and we had 8 filled orders with a 2 SPU move. That's the speed unit which you find up here, so a 2 times $7 move, and we gained $56, and one time we failed and we lost $7. So that's a nice progression that we made within trading along just what the chart was showing us. This is why we call it trade what you see, and you see it a lot of times. The threshold of the price has to be surpassed. So here we spell out trade only if $388.81 is surpassed the next candle, and the next candle did surpass it, so the consideration was filled, and after 2 SPUs we get out. We don't get out with another stop, we get out with a positive target. And on all the charts for NeverLossTrading we always have those lines which we call the NLT box line, and we have the NLT double-decker line, the red line. Either one of those will take for a stop line. Here, for example, we would trail our stop to the upside with that red line. So here was our entry. After we got filled, we would trail our stop to that line. So then we would trail it here, but we get out on the positive exit. We are now waiting till our stop gets triggered, and we give half of what we already had in the box basically back to the market. So that's a big advantage of the system. Here you see a chart which we call the NLT HF, high frequency trading signal chart. There is a base of new signals picked up with this, and you'll see it, you trade it for always 1 SPU, to the up, to the downside, to the up, to the downside. This is the chart of the S&P 500, represented by the spiders. The spider is the ETF of the S&P 500 as a trust, And so just by trading along with it, you see what the entire market is doing. You take it to the upside. Every check mark is a positive trade. You trade it to the downside. Trade it up, trade it down. And this is how we are going through the entire days, always knowing which direction we take and being confirmed by blue, signalizing uptrend, or by red, signalizing a downtrend. That's the Wells Builder chart, how we call it, and we use this chart in combination here with what we call the top line chart. So you have entry proposals on a top line chart or on a Wells Builder chart studies. In those studies you see the three waves reflected. The base wave, of the currents, the high and the low tides, moving in and moving out. Then the buyers or sellers, who is in charge, sellers in red, buyers in blue. And here the momentum that is built from all these waves together, showing what actually happens in the market. Each and every one of those studies can be traded on their own successfully. They all have a positive expectation. Together with what we paint on the price chart, we overlay them, let them talk to each other, and with that have multiple variables telling us the same story of what's happening in the market. Because some of them, they measure liquidity, others they measure the market momentum, and others take statistical approaches where we are focusing on linear regressions, price move out of a current range and going with it. So all these elements are considered for us to trade along with them, because they paint their decision proposal right on the chart for us to decide if we want to take it. In the Wells Builder chart, this is a typical 3-arrow alignment. It says trade to the upside. We would do that for $1.54 at that point, and we would have been filled and successfully ended the trade. It sounds small, 154, but if you take a trade with an option, which we will teach you because we have a special option scheme that we follow, it's called a Delta 4 scheme, and then you'll make a very nice profit in 3 to 4 days. So that's all you are in a trade, because in the long run nobody can basically estimate where the market is going. So therefore we take a lot of short-term opportunities to the upside, to the downside, and we trade to the up and the upside again, depending of what the system is telling us. Here the downside trade was not announced, and so we always take secure trades to move along. What does it work with? It works with stocks and their derivatives like options. It works with commodities like gold and oil and agro products, and it works with stock market indexes very favorably. Also with ETFs. It works with currencies. If you trade them as a currency pair, like the US dollar and the euro, or the euro US dollar pair, or if you trade them as futures, like what's the 6E euro futures, which is measured against the dollar and issued by the CME, or with treasuries, when you want to trade 30-year, 10-year, 5-year bonds and notes. Some people, they say, oh my God, I don't want to trade bonds and notes because they have close to no interest. We are not trading the interest. We are trading the daily value, and you will be surprised if you're not yet familiar with bonds, what they can do for you in a day when you are on the right side with them, and how you can also hedge your portfolio positions when you have them in your portfolio as a hedge to the up or the downside for your current holdings. So those are the 4 programs that we offer. NLT top line, that's what it is, it's top of the line. We look for high short-term returns with options or within trading the stocks. We have upper and lower studies where we correlate the market happening of a security that we watch to the overall market happening of the market, trigger buy and sell signals out of that, and also add seasonality, where we see how a share progresses over time, and if it has the similar pattern at the same time of the year over and over again. If that's the case, we take the pattern and we trade along with it. The other and new concept is coping with high frequency trading or algorithmic trading. Here we developed, in particular for stock traders, trade opportunities that are spelled out on short term for 1 to 5 days being in a trade, or long term 1 to 5 weeks, and we aim for high returns between 3 and 30% depending on the instrument that we teach you to trade, and we have all these trades limiting their risks. The same counts for the NLT top line. We want to protect our capital, we want to limit the risk. On the NLT HF trading, we only look at upper price levels. There's no confirming lower charts, but it's a very good system, very new, coping with high frequency and algorithmic trading, in particular for stock traders. It works for all the securities, but what we do for those who sign up for the concept, we also provide at minimum 3 times a week a market report spelling out where NLT signals overlapped and show an opportunity to trade to the up or to the downside. Then we have our wealth building concept. It looks for 2 to 5% weekly or monthly returns. You trade between 2 times or 3 times a week or a month, depending on how much time you have. You use upper and lower studies, and we are basically looking at a fixed set of assets, which we will build you in a watch list, and you can every day spot how they move because they're easy to trade. They work in particular for people who are not professionally trading because they can be traded even with market orders to the up or the downside because they have so much volume that spreads are tight and the fill rate of orders is humongous. So here we are in a real nice institutional environment where exchanges go quick and where we have favorable fill rates for the private investor. The last program is for the day trader, the pro. It's income generating. We look for 1 to 5% income a day with the concept, picking specific securities, use upper and lower studies, and trade along with time-based channels. With a lot what we see is painted on the chart. This is really for somebody who wants to learn how to trade the waves during the day. That's an essential program. The beauty to our concepts is you can combine all of them. Yeah, so the 2 base concepts, the wealth builder and the income generator, can be combined with the HF stock trading or the NLT top line program to give you additional signals on the price chart, because those here give you the signals on the lower studies. So never be late for a trade. What do we mean for that? Because we get in early in trades and we trade them very consecutively, securely in growing, falling markets, sideways markets, for extra income, secure income, and steady income. That all has to be explained by means in our mentorships, and that brings us to one point. Our programs are 3 days that we teach each of them, and after those 3 days we support you for another 6 months, where we will meet at least once a month to discuss how trading was, how you performed, and if you have questions in how to apply NeverLossTrading. Aside from that, we should definitely video record our mentorship programs and pass them on to you, and only to you, because we often work not just in webinars but in online meetings where everybody can speak, ask, so that we can learn from each other, and within that we are striving for those challenging goals to the up or to the downside. So that's again how it looks on the chart, and we don't want to be late for a trade because our signals give us very early, as you see, the new trend by confirmation. You saw here the price was coming down, we traded it downside, there we should be out by our SWU measure. It retraced, signal to the upside, entry. Yeah, our stop was down here, not challenged until it moved up, then signal to the downside, entry, and to the downside, signal to the upside. You learn the difference between a red and a blue and an orange signal. Orange is an early trend, but they all have their high probability, and we want to make it easy for you by trading red and trading blue. Yes, you know, red to the down, blue to the up. All others have a little different meaning, and we teach that in particular. Yeah, so we have trade specific chart indicators. Then you saw the 4 concepts that we are selling and offering as mentorship programs, and they all have individual supporting lower studies, or they just focus on the upper studies. And we're not only giving you the teaching, we give you written documentation with laser sharp trade situation for you to follow up again. So you'll receive, depending when you buy, for example, the Wealth Builder mentorship program, you receive a tutorial, you receive an option tutorial, futures, because that's what we also deal with in there, and all those tutorials have laser sharp mapped out trade situations for the security as for the option, of how we can best trade it, where to enter, where to exit, where to put the stop, how to trade along with the new market direction. So you get hundreds of pages of clear-cut communication that help you to follow up and not leave you alone after our training session. Yeah, the software is also used to come. It's licensed to you, so that means we keep the copyright, but we license it to you without a license fee. You pay a one-time fee for signing up for the seminar. The software is used to keep as a license, so we don't want you to send it all over the internet, because that would not be appropriate for our intellectual property and all the years of work we got in there. Yeah? So that's how it looks as well. When you see then trade targets, yeah, on the HF concept, for example, so you have your entry plus 1 SPU, then your stop was a maximum of 1 SPU. That's all spelled out in relation to the signal that triggers, and we follow. Yeah, the signal triggers a buy or sell order, and when the threshold of the buy or sell order is fulfilled, so it means the price moves below or above the threshold, then we trade. Yeah, here you see some of our upper studies, yeah, which come all with it. So it's not just one studies. You see our speedometer box. This helps you for target setting. It's on every chart. It sits right on the left hand side of the corner. The purple zone, which is indecision, you see one up here. Then we do candle color. That's a base study where we color the candles to identify a trend. So as long as they stay blue, yeah, you see, for example, here's an uptrend, the candles stay blue, then they start to be painted in red, and they return to blue. So then we have the NLT wave. Within that, we are doing a wave count between the amplitudes of a price wave. Here was to the downside, so you see one wave up, or one wave down, I'm sorry, and a wave up, and a wave down, and a wave up. So a wave always has two parts, one uprising and one downwards pointing wave part. And that indicator helps us and gives us also a regression channel showing us the trend. In the case of this example here, it was a downtrend. The double ticker is our study which frames the price range, tells us where the stop is, and tells us with a green line where the highest likelihood and probability is for the price to come back if it retraces. So within that, it gives us a second chance for an entry if we miss the first one. Then we have a light tower candle. That's a happening where a lot of price move is instigated by an institutional investor, and those help us to define and specify trade situation. The price volume study colors the volume to identify areas where a lot of new volume came in and triggering a downtrend or confirming it, or here confirming a big exchange is happening. There might be a move to the opposite side, which then happened in that blue line up. Yeah? Then we have our price gravitation lines. You see them at the end of the chart. Those are there to help us to specify where prices most likely will accumulate. Accumulate means go to, where they find support, resistance, or where they will gravitate to. That's why we call them price gravitation lines. And we always, for every week we trade, we have a baseline, we have two satellites outside specifying if the price goes up, they go up to that line, or if the price goes down, they have a high probability to move to the second satellite line to the downside. In addition, besides those statistical lines, we add historical lines to give you clear indications where is a good place to either place an opposite facing order when we fade the trend, or where we place a sell order when we are in to the upside, or we place a buy order to cover when we trade it to the downside. So this is another example of how it looks. So we spell out each of those indicators. I right now refer to the light tower candle for you, in its means, in its direction, how you find them on the chart, and how you can use them to trade successfully on high probability trade situation. So there is no beginners league, and so therefore trading is not just for beginners, it's also for professionals. If you want to refine your trading, what we offer you here is a system that's totally new, and this is what we launch it for, and it's a system which has a high probability, which is every day also traded by us. Another example on the option table. So if you learn how to trade our Delta Force options, we help you to select the right option, and we'll tell you and teach you which one you do. If we trade to the upside, we use definitely a call option, but not the Delta 70 that everybody else does. We use a different one, and we also use a different put option to trade along and trade for our benefit. And we always or mostly trade with those with limited risk. So that means we are buying options a lot of times. We have strategies where we are selling option. That depends on the market circumstances. Those are all spelled out in our option tutorial, and we definitely teach them to you. Yeah, so here another example for 30-year and 10-year bond out of the wealth builders, because those we use for wealth building as well for day trading. In day trading we have our specific time frames where we worked out that these time frames represent the lowest noise, meaning you're not having too many back trades. If a direction gets confirmed, we can trade along with it with a high probability, while other time frames or observations often lead to the market to retrace for short term and trying to trigger the stocks that are put in. To document all of everything and make a statistic out of it, we added a statistical accumulation where you can enter your trades in a journal to see if you traded short-term trend reversals, and within that you can calculate a statistic to see how successful you did it, how much earnings you made, and how well you do. That's the scorecard to success, because here it should show how well you traded along with the instruments and how well you were able to apply them. And I tell you, most people, they do themselves pretty easy because it's on the chart. Trade what you see. A trade situation is right spelled out on the chart for you to succeed. And that's again how it shows. Yeah, can't complain about it. It says, for example, also sell here. Yeah, when you take that sell order. Let me take the pencil. It says sell when the price goes below this. Here is the candle. And basically it never happened that the price went below, so there was no trade for us to be made. Next day we get a buy signal. Price threshold was right here. It was met the next day. We are in the trade to the upside. Yeah, the trade environment was blue, and trust me, had that price been undercut, because it's not us making that scheme, a lot of people, the crowd, would have started selling at that point, and that would have driven the price right down there, and we would have been prepared for trading along with it. Yeah? And by having the SPU measure, here it's the S&P 500, prior we looked at the spider, yeah, that's the E-mini S&P 500 as a future, so that currently moves $15 a day, and every point of those is $50. So if you just hit one day, you're basically making $750 by getting the direction right for a day in the S&P 500 futures with our system. So moving ahead, the same works for a lower time frame here on the 1 hour chart, and what we see is, instead of having 15 points now the 1 hour chart at the time tells us we are moving with a speed of 2.4 points. So when we enter a trade, we are no more aiming for 15 points in one direction. We are aiming for 2.4, or better to say 2.5 to round it up. And those are the successful trades painted on the chart, which say filled. So that means the price threshold was cut out. We are in, and we are in to win. Here again, trade. We are out already at the trade, so we come back. Trade reverses to the upside, tell us to enter above that candle, move to the upside. And what did that candle do here? It wonderfully confirmed this. So in the morning hour, we had the first candle initiating, stating a new high. You see here that line was basically the old resistance. New resistance established, new resistance taken out by computers or whoever, jumping on it. We see it, we trade along, enter here, and we know our SPU 2.4 points, so that's 24 to 26. So even here we would have been very conservative, because after that move we are out. But when you see how it all went through, besides going up, it retraced again, and if there's another trade we most likely get in again, or we look at multiple screens and might find an opposite moving opportunity in the Nasdaq or in the bonds and notes. There are multiple instruments, even gold, you can trade with our system successfully. So if you want to learn more about it, because here I'd see that as an introduction, find us, sign up for our webinars, either by clicking the link that I embedded in here. If that doesn't work out of whatever reason, come to www.NeverLossTrading.com, and from there find the button webinar on the right. This is where you can sign up for a webinar, or even if you are that enthused after our initial introduction that you say, I'm ready for one of the concepts, but I want to know from you which one it is, then I'll be happy to give you a call at your convenience so that we can go through and find out details of what can suit you best. So that concludes it. So we want you to trade what you see. We want to offer you the opportunity to learn more about it. So come to a webinar where we test it, and you can throw whatever security you want to ask us about. We don't do PowerPoints in there. Then we do really live trading or live testing of where to enter, where to exit, and how to best trade with NeverLossTrading. So that concludes the presentation. Thank you very much for your attention.